Hi all, this is Akshara Menon from Famous Bazaar. Welcoming you all to the episode 2 of NRI webinar series. This time we have Mr. Anirudh Garg with us, and today's topic will revolve around long-term quant investing in Indian markets. Anirudh headed the research and coding team that developed INVasset AAID, that is Advanced Algorithms for Investment Decisions. INVasset's award-winning proprietary investment strategy. He has his bachelor's from 𝐀𝐧𝐢𝐫𝐻 College of Business Studies, Delhi University, and Master of Investment Center, United Kingdom. With 15 plus of experience in research in stock market, Anirudh is actively involved in managing a prop desk of USD over 20 million and PMS USD over 10 million. Welcome to the show, sir.
Thank you, Akshara, for having me. It's indeed a pleasure.
To start off with, in your presentation, it was said that INVasset was launched with a dream to make people to achieve their financial freedom. So where do you see this vision now? So, if you could give a small brief about your organization to the benefit of the participants and investors.
Okay, thank you. So first of all, let me give a quick disclaimer that any stock sectors or any views that we discuss about today, they are personal and for education purposes only. Dear investors, please consult your financial advisors before taking any investment decisions. Yeah. So about INVasset, so we are a 30-year-old investment house. We started in 1992 when my father, Mr. Anirudh Garg, he got the ticket for Ludhiana Stock Exchange in Punjab. These were the small regional stock exchanges that were there for him being a chartered accountant and a company secretary. So I think he was meant to do this, and the journey has been great. He started with a meager capital of 10 lakh rupees, and over the past, I would say 30 years now, 32 years now, we have grown at more than 28% plus. You can all do your maths. I won't flaunt about it. But yes, I joined the business in 2007 at the very peak of the great India shining run. And I was at the UK studying at the ICMA Center, and everything seemed fine till then. Then came the 2008 financial crisis and the realities came in. And that is where INVasset was born. When, I as a person have a nature to, if there is some problem, I'll try to solve it from the very basic, from the root. So we set up a research organization and then, consulted a lot of fund managers and a lot of retail investors we interviewed, and a lot of study went into it. That is how the INVasset journey has been. As far as my dear investors are concerned, I always believed that if you are getting market returns also in the stock market and not losing money, it is great. But what if there can be a superior model to deliver above average returns? So INVasset is based and totally focused on delivering above average returns to the investors. If we talk about since inception returns for INVasset, I think the market has done something around 20%. We have done something around 40%. That is what the guidance or the target I set for myself. And yes, whenever you're investing, you apply your 100% dedication, you apply your hard work, and then somewhere God also has to help you not to make those wrong decisions. So yes, the journey has been great, and I believe with a lot of confidence that it will be same or better going into the future as well.
Yeah, we'll talk about the fun bit later in this webinar. So let's go, bit on market. US Fed did signal about some concerns about the inflation and what kind of a rate trajectory that you foresee, and what kind of the RBI impact on the markets.
See inflation. To see inflation, there is a very simple rule. Do what the Fed is saying. If the Fed is saying there is a problem, you have to acknowledge a problem. Back in 2020, when COVID hit, everybody was like, stock markets would decimate. This is like once in a sanitary event, and there is no point investing in the markets as COVID would just take away everything. And the Fed that time said that, okay, we'll step in, pump the money, and see the record highs that we have seen from there over the time. Back in 2021, I clearly remember when the Tata Steel results came out, investors, fund managers, they were all busy extrapolating those targets for the next 5 years. But the Fed said that we have an inflation problem. See, why Fed is important? Because it is the US dollar, which is the greenback of the entire world economy. These are the people with money, so we will have to listen to them. And from 2021, we saw all these interest rate sensitives taking a backseat. Now the Fed is saying that inflation is not that big a concern anymore. The Bank of England says that maybe in the next 3 months we'll have a rate cut. I feel the same for RBI as well, because we do not have an inflation problem in India at all. The only thing that I think is stopping RBI from taking a rate cut is that what will happen to the Indian rupee vis-a-vis the dollar if the rate cut comes. If you do it before the Fed, the Indian rupee may reach at 88, 90 levels. I think that is something going into the elections that the government is not ready to do. But yes, post elections, we do feel that a rate cut is on the cards for India.
Yeah, true. And like being it is earnings season now, like how do you sense this quarter four results which just came out and along with this management commentary?
Oh, earnings. Earnings, I
Yeah.
believe in India are this time a mixed bag, but on a positive side. Yeah. So India is a growing economy. We knew that earnings would have been great. Only a little bit disappointment on the Asian Paints, results. But I'm pretty impressed with the results that the banks are giving, especially my favorite State Bank of India. Again, not a recommendation, but yes, I think the earnings bag has not been that bad. But Akshara, when we are analyzing earnings, it's not how good or bad it had been. It is like how they have been actually versus perceived. So I think market had perceived them to be a little more better than what they actual came out to be. But I think earnings for Nifty, especially the old economy, should not be a problem going forward.
Yeah, when you say that, FMG as a sector, got into a green signal of late, which was not in that case few years ago. It never got into a green one. But now of late, we could see a lot of buys in the sector. So how do you see this?
I look at it in a different way. I think the results have not been that great. But what is happening right now in the markets, Akshara, is that we have seen a very good rally in the small caps and mid caps in this old economy run. And based on historical risk reward valuations, the small caps and mid caps have become a little more on the expensive sides. And as it is true for the markets, are bound for a correction. Maybe it comes another 3 to 6 months. I do not know that, but yes, historically they are now expensive. I would even go to the point of saying that they have entered into an exuberant zone. So what happens is that as money flows from value and growth to safety, sectors which are defensive like FMCG, pharma, become more attractive. So that is what I believe is happening in the Indian markets, and where you see your FMCG and pharmas taking a green tick in the market.
Moving to the next question, I'll ask the participants to put their questions on their Q&A box so that each and every question will be answered in the flow of the webinar. And moving on to the next question, is that of course one more critical geopolitical thing that is in consideration is the tensions between the Israel and Iran war, and also last month we could see FII selling. So how do you see these repercussions happening, making the market trend now?
See, firstly, we believe that the war is very, very unfortunate. What is happening should not happen at all. But unfortunately, the markets, they do not give in to wars or bad news as we humans do. Markets are totally, I would go to the extent of saying that markets are totally opposite to the human instant reaction. So markets, they generally feed on these bad news. And whenever such a bad news comes, a bottom is formed. If it escalates to a point that it becomes beyond control, again, the market would keep a toll on it. But for now, I believe it is over for the Indian markets. The correction that we are seeing right now in the Indian markets is firstly because I believe of the valuations. Secondly, the great confusion that is being caused when this great democracy goes into the election, with asking the primary question that will the BJP return or not. And this is what happens when markets are expensive. So I think one should keep focusing on long term investing in relative change, and everything is all right for the Indian markets.
Yeah, so with that we'll move on more into your fund.
Okay.
So very first question is that can you elaborate on INVasset AAID and how does it revolutionize this investment decision making in this INVasset PMS?
Okay, the INVasset AAID. Okay, Akshara. So whenever a client also or an investor asks me about the AAID, AAID is a vast set of algorithms based on our experience that we have gained over the past 30 years, 3 decades in the market. But to better explain it, the way I found is, let's go behind the philosophies. I'll take some time to explain this to you. As I told you that we formed a research group in 2010, which interviewed a lot of fund managers and research and retail investors and research analysts and everybody. So what we found was that there were 4 principles on which I would say that the INVasset AAID, Advanced Algorithm for Investment Decisions, rest. Firstly, capital protection. The capital is the only real thing in the market. You will make profit, you will avoid losses, you will compound your wealth, you will pay taxes. That is all in the future. But the only real thing in the market is capital. So whenever you have to make a decision between, say, high risk, high return, or maybe a low risk and a medium return, we'll always choose the latter. The most recent example being back in January end, when our algorithm told us that the mid and small caps are entering a expensive phase, we shifted to the entire portfolio to large caps, which was like we were like 85% mid and small caps, 15 large. Today we are 85% large and 15 small. Yeah, small and mid. So these are the decisions that you have to take when you opt for capital protection. Secondly, the alpha generation. As important as the generation of preservation of capital in the market, equally important is the generation of alpha, like how you increase the money. And I believe over a 3 to 4 year period, you should be able to outperform the market at least. So what we aim at INVasset is doing 1.5 to 2x. No guarantees, but this is the target that I set for myself. And we have been able to deliver this in the last 4 or 5 years of our inception, and before on our fund when we were doing it for our prop. Thirdly, I believe the principle that we rely a lot on, and I think is the backbone for the INVasset AAID algorithms, is that in the markets, as human beings, we create biases from time to time. For example, I would only invest in quality. I would do pharma, FMCG, IT. I would not invest in public sectors. Okay, commodities or cyclicals are only a myth. So these biases that you create over time, markets, when they turn their tide, they punish these biases. We are all here to make money. We should not create a bias, because when we create a bias, it limits our lens to view the reality. I remember back in 2020, when 2022, when we were buying the public sectors, everybody said that it is a blunder because public sector had not made money for the last 10 years. But we could see the entire relative change happening in the favor of public sectors. So do not create biases in the market. So INVasset AAID is a totally bias-free algorithm. Yeah. And the fourth, I would say, the quant. Whenever something new comes into the market, it is perceived as something foreign and not accepted that easily. So my father used to tell me that when NSE brought in these terminal trading, the digital online trading, back in 1994, 95, all those people that were making easy money till then, stock market would be finished, because what they were doing was becoming obsolete. But with the passage of time, everybody realized that it is for the good, and we have seen our market maybe multiply 100 times from then. So accept the change, accept technology. In any business you are, if you are not moving with technology, you are bound to become obsolete. So yes, technology is the must, I would say. That is why we used quant and the big data to choose stocks rather than just the fund manager giving his own opinion and experience. So these are the 4 principles on which INVasset AID is based. Apart from that, INVasset AID distributes the market into 4 big quadrants. The first quadrant is value. The second quadrant is growth. The third quadrant is quality. And the fourth quadrant is safety. Value, growth, quality, safety. So, as I told you in point number 3, that we are a bias-free algorithm or a bias-free investing house. So out of the four value styles, these are the four value style. These are the four investing styles out there. So why do I limit myself to one? Why don't I do whatever the marketing is asking me to do? So we do value. And what does a value investor do? A value investor, the quadrant one investor. Imagine, I would believe, the father of investing, Benjamin Graham, sitting in quadrant one on his table. Imagine that. And what is he saying? That I will do only value. What I do? I'll buy below the intrinsic value, sell above the intrinsic value. So we do value investing only when there is overall value in the market. That means when the markets are oversold, when there is too much fear in the market. Why we do value only in when the markets are oversold? Only because we feel that the markets are full of intelligent people, and what may seem value or undiscovered value in a bull run may actually be a value trap, because everything is not out there. Sometimes the managements, they hide things from you, or sometimes they themselves are not aware, or sometimes the trend is not clear, or sometimes the inventories are building up that people do not know of right now. So a lot of things from time to time come. So we do value investing only when there is overall value in the market. From oversold markets, as the markets they resume their new bull run, okay, we go in for growth investing. So we have developed something called the INVasset Greed and Fear Index, which tells us which stage of the market we are in. So in phase two, when we believe that it is a new bull run that is on the cards now, we go in for growth investing. As a growth investor, what does a growth investor believe? He says that every 3-4 years, there is a new bull run in the market, guided by, which is led by new companies, sectors, or groups. Why? Due to some relative change. Some changes happened. It is a duty of the fund manager or the investor कि क्या change है, how big the change is, and how will it affect the top line and bottom line. So put it on the paper and then analyze what is happening. Because of this, we were able to get those all wonderful capex, railways, defense, and power companies that we bought into. You have to look in the last 3-4 years what has happened in the markets, and then take your decisions accordingly, not what is perceived to be a general a general perception like Asian Paints is a wonderful brand, it will do well. No, what has happened in the last 3-4 years, that will translate into the results in the next 3-4 years and ultimately into the stock price. Okay, now when the markets they become expensive, stage 3 sets in, which is the quality stage. We believe that markets, they have a tendency that even if they become expensive, they can stay expensive for a very, very long period of time. From 2017 and maybe 2017, 22nd of December is when we entered the quality phase. And I remember till COVID, which was in 2020, 3 years, around 2.5-3 years, it was in that phase only. So markets, they can become expensive and stay expensive for a very, very long period of time. The risk reward ratio is very simple in this phase. You will earn around 15 to 20 if the bull run continues. You lose around 15 to 20 if a bear run sets in from the expensive zone. And finally, the most interesting stage at INVasset, the safety stage. I don't think any fund manager in India does that. Where my perception is that because I believe that we are all investors and not stock market investors alone. So when the markets they become exuberant, it's okay to take a breather from time to time. It's okay. Let the markets chart out their own course. We are in a place where historically there have been corrections into the market, as I believe we are in right now. So yeah, in this phase, what we do, we try to protect your capital. We would go into ultra low beta stocks, or maybe hedge your portfolio a bit. And unfortunately for the NRIs, you're not allowed to hedge because of the reporting to the RBI. But yes, then you can maybe start your SIPs altogether again, that even if a fall comes, you're protected. Yeah. So in stage 4, we are protecting your capital. So this is a combination of 4 stages that the INVasset AAID you talked about.
So currently we are in the 4th quadrant of safety.
For me, yes.
Okay. So moving on to the next question. Your 2-run theory, which is categorize the investment scenarios into old economy run and other one is new economy run. How does that impact your investment strategies?
So what happens in the market? That stock market is a beautiful place. where what do? They pick up something from the dust and turn it into diamonds. You'll see stocks going up 20 times since COVID. Were these stocks not good companies 5 years ago? No. What happens in the market is market generally rotates between two phases. One is an old economy run, one is a new economy run. In old economy run, you'll see every factor that we talk about on a higher side, like growth will be high. Look at the Nifty earnings as we have crossed the 1000 mark. I think 1025 is what we are at. So earnings would be great, growth of the companies would be great, growth of the economy would be great, inflation would be on a higher side, commodity prices would be rising, and energy prices would be rising. So everything is going up. Why? Because there is too much money supply into the business. Yeah. And what does an old economy run focus on? It focuses on value. It keeps on discovering value and keeps making it expensive from time to time. On the other hand, all these factors that we talked about are on a lower side or a sideways moving, like in the old economy, new economy run, which we saw from 2008 to 2020. Let me give you an example. From 2001 to 2008, we saw steel prices going up. But from 2010 to 2020, the steel prices were on a sideways or going down only. So was there something very wrong with the consumption all over the world? What happens is this is a cycle. Capacities are built up, then capacities go down. This is a cycle that the world goes through. So in new economy run, it focuses on quality. And where is the quality present? The quality is present in FMCG, pharma, IT, white goods. So all these companies are new economy companies. So what happens during a run is that these particular companies, owing to the massive demand and the recency bias that we were talking about, they become superbly expensive. For example, the biggest example of this is Asian Paints. Asian Paints went at 12% growth, was quoting at 120 PE and justified by the best fund managers in India. If we look at the Peter Lynch formula, we can never ever do that, right? How can you justify something at 120 PE owing to whatever brand it has at when growing at 12%? So this is what happens. They become superbly expensive, and then the market, it changes its, I would say, the glare towards what is not expensive right now and where the relative change is happening. That is why we see the old economy sectors now doing well. Let me give you an example. From 1987 to 1992, we saw the greatest bull run of India, the Harshad Mehta run, or today we can call it the scam also. But for me, it was the Harshad Mehta run. The Harshad Mehta run focused on old economy companies like Apollo Steel and ACC were the biggest winners of that time. Then there was a 2 years of bear run up till April 93. And from April 93, we saw another bull run starting all over the world, which was led by new economy. Firstly, the FMCG, then the pharma, and then ultimately, before finishing, the IT took over. We saw companies like Infosys going up 1,000 times in that run. And then from 2000 to 2001, we had a bear run. Generally, after every bull run, we have to see a bear run. And then from 2001, as the tides changed, the old economies run set in again. 2001 to 2008, we saw the old economy run fueled by public sector banks, then by commodity companies, then by real estate. This was then by Reliance, the Reliance Power IPO that came in that time. So all these there is a way that things go. And from 2008, we saw 1 year of bear run. And then from 2009 to 2020, we saw the new economy run, in which everything that was quality was put at a price level that they did not deserve. So this keeps on oscillating. Why does this keep on oscillating? Because whenever the markets have to perform, they have to choose where thing which was neglected for the past few years, or maybe more than that. So this is how the markets, they keep on fluctuating. How we use it as, if our algorithm suggests something which is a new economy in an old economy run, we reduce the weightage of that company. If our algorithm suggests something which is same as the run which is going on, for example, when the railway stocks and the defense stocks came in our algorithm going to relative change back in March of 2020,
During COVID time.
2022, yeah, March of 2022, we doubled up on them because something which is having relative change belongs to the old economy is coming in an old economy run. What else do we need? So this is how we use our two run theory. It does not mean, Akshara, that the others won't perform. Yeah, new economy cannot perform in an old economy run, but generally, because of the valuation difference that is there, the markets take that course.
From this answer, so elaborate answer, I could understand how much you love you had for the market, because when you give adjective saying that this is a very big market, stock market is very beautiful, and the love that you had, I could sense that from this answer. Thank you for that. And moving on to the next, of course, with markets doing great, even INVasset PMS was had done remarkably well in FY 2024, emerging as a top performer. So, could you elaborate on this decision that has taken this INVasset PMS to the top?
Thank you for that. I think when you come to the markets, there is nobody called the top performer. It's like the same we were when we were in class. It does not matter that you topped the class or not. What matters is that are you doing good? Are you living up to your own expectations? So I'm very happy that over a 3-run period, we are living up to our expectations. I always want to deliver 1.5 to 2x post return, post fees of what the Nifty is doing. Nifty did 20, I did 40 post fees and return. I am very happy for that for my clients. I think you keep on doing this. If you're doubling your money every 2.5 to 4 years, in the next 20 years, immense money can be made, immense wealth can be made. And the maths is pretty simple. Just rely on the power of compounding. Yes, what we are doing differently, nothing we are doing differently. We are doing just what we know. The only important thing in the market is if you have developed your own strategy or a way of viewing the markets. What is a strategy? It's just a way of viewing the markets. If you have developed your own way of viewing the markets, add to it, improve it from time to time, but do not be attracted to somebody else's view because the other person is doing better. Yeah, never compare yourself. If there is some flaw, if you can add something to it, do add it. But if you have a view which is time tested, we have tested our thing for 35 years since 1st of January 1987 on a day-by-day basis. So we know what falls come, what is the investor psychology is going on and everything from time to time. But yes, we have stuck to our basic and we have removed bias altogether. At this point, I can only say that this great return was only because we were not swayed away by the popular market rules like PSUs are not for profit and PSUs is a crime. We did not give into those popular opinions and believe what the relative change matrix was telling us. Again, here now everybody wants to be a part or a chunk of the PSUs and the small caps and mid caps. For a fund manager sitting outside from your favorite sector of the run, the prime sector of the run, it was very, very difficult when the investors, they compare you on a 1-month basis or something with other PMSs or other funds and everything. Just stick to your basics. Do not give in and make something which is progressive, bias free, and just keep on doing your work time to time. Just keep on working on when you are in a business or when you are into a field where our heart is. I think everything is all right. That is why INVasset was about it.
Yeah, so we can make it as a mantra saying that never copy or compare with others.
Absolutely.
That's a mantra that INVasset.
I think that is something that I'll take it from you.
I took it from you, so thank you for that. And moving to the next question, actually, could you differentiate between, because Quant has been in this industry for long, but so we could see the traction coming off late. So, and how do you differentiate a Quant in a mutual fund, a Quant in a PMS, and why should an investor go for a PMS?
Okay. So first of all, you cannot differentiate Quant between a PMS and a mutual fund. What is Quant? Quant is basically your experience, your learnings set into a code or an algorithm so that when you are in the pitch, you're batting for your investors, you have a definite way of approaching every ball that is coming your way, right? So Quant is very, very simple. You will have a different Quant method. I'll have a different Quant method. based on my experience, you will have it on your experience. So every fund manager will have a different quant system, as is the the thought process of the fund manager. Mutual funds versus PMSs, I believe the advantages. So there are, I first of all, please let me reiterate that one of the best investing tools out there for the investors at large is a mutual fund and not a PMS. Mutual funds, I believe, are the government of India's SEBI's biggest gift to our investors, because it did the task of getting the investor psychology moved from the traditional sources like FDs and gold and real estate, all those assets, towards financial assets by reiterating mutual funds sahi hai and everything. I think a commendable job done by SEBI for that. Now, when it comes to the difference between a mutual fund and a PMS, the only difference that I feel where mutual funds are superior is that whenever a mutual fund manager buys or sells something, until the unit holder, the investor, is holding the units, he does not have to pay any taxes. For example, in your portfolio, the mutual fund held Reliance and then shifted from Reliance to maybe something like a Infosys. But you are holding the units, you do not have to pay taxes until you hold the units. But in a PMS, since it is happening in your own demat account, it will be considered as your personal investment, and then you'll have to pay taxes on it. But the advantages PMS managers like us have, that we are operating on a small AUM. See, what is the advantage of the small AUM? Sometimes people take it otherwise, but I believe that the only advantage is the smaller AUM. There is a mutual fund which is doing 50,000 crores of AUM. Now, this mutual fund wants to invest in, say, 25 companies. Normally, he would invest 2,000 crores in a company, but maybe let's say the fund manager says that let's give some weightage. So at least he will invest 1,000 crores in a company, right? So now, when he is investing 1,000 crores in a company, he finds a company in the defense sector which is currently, say, trading at 10,000 crores. To get that company, he will have to buy 10% of that company. He will have to give an open offer. No mutual fund manager goes into the trouble of giving an open offer or going to that much detail. So mutual funds that way are, because of their AUM constraint, are not able to live up to the returns that a PMS can deliver. So while a PMS manager is able to deliver you that, because why? Our AUMs are smaller. We do not have to buy in more than so at INVasset, we do not buy more than 0.5% of a company. Yeah. So secondly, mutual funds, equity mutual funds, they have to maintain 65% of their equity allocation at every time as per SEBI rules and AMFI rules. Now, in a PMS, you are totally free to do whatever you want. So, right, the current stage, or when the the fund manager feels that, the PMS manager feels that it's a right time to exit the market, so maybe take a breather, he can do that. A mutual fund cannot do that. Yeah. So these are the two advantages that I think a PMS has over a mutual fund. But in no way I am suggesting that mutual funds are inferior products. They are a very good products. Please keep doing your SIPs and helping the Indian economy and your assets to grow with the Indian mutual funds.
Yeah. So most important saying that investments a year. Basically that.
Absolutely.
It's not about mutual funds, it's not about PMS. Investments is what is important.
Absolutely.
So let me take one question from the audience from Nimesh. All are cyclic sectors. So all are cyclic. So what should be your exit strategy, and what's the performance since inception, sir?
So our performance, you can go to our website invasset.com, but I think when I last checked, it was around 40% CAGR, vis-a-vis 20% on the Nifty, something like that. And you were talking about the exit strategy, So exit strategy, as I told, that we have 4 phases. When we move from one phase to the other, we change our stocks completely. So from value to growth to quality, and from quality to safety. Somewhere when you realize that the risk reward ratio is not in the favor, you have to develop models to judge the risk reward ratio in the market, and according to it keep on taking decisions from time to time. Saying that, Akshara, I take proud in saying that we have one of the lowest churn rate in the industry.
Yeah, that was my next question. It was less than 0.5, right?
I think I read your mind. So from in 3 years, in the entire when the three so approximately 2.5 to 3 years, when this entire cycle of 4 stages play out, we churn. We'll have 4 churns: value, growth, quality, safety. To approximately 3 to 4 churns we have. So you can expect that we change your portfolio once a year. So when we last did a change, when we shifted from quality stage 2 to stage 3, when we shifted from growth to quality, that is from mid and small caps to large caps, I take pride in saying that 95% of my investors, with 95% of their portfolios, were in long-term capital gains. So they had to pay only 10% taxes on their profits they had realized.
Okay, thank you, sir. When you talk about this risk reward ratio, like INVasset Growth Fund, debuted during COVID era. So experience, and it would have experienced a lot of downturns. How did the fund perform during these challenging times, and how was the risk mitigation taken?
Okay, so to explain that, let me explain how I view risk. See, every time we talk about, and a lot of questions I get on, what is your this ratio? What is your that ratio? What is your trainer ratio? See, markets are, for me at least, markets are not like that. You have to decide what will be your ratio when. The most easiest ratio for any investor to understand is what will be your beta when, right? What is beta? Nifty moves 1%. If your portfolio moves 2%, your beta is 2. If Nifty falls 1%, your stock falls 2%, your beta is 2. So I believe that when the markets are oversold, when the weak hands are exiting the markets, it's time to increase the beta. When the markets, they become expensive, it is a time to decrease the beta. When the markets, they become exuberant, and the only investment thing that you feel is out there is the stock market, that is a time to reduce the beta further. So it is what I believe is that when you are in value and growth stage, until and unless these stages they become expensive, the downturn is not more than 20%. For example, something like a demonetization happened, markets were not expensive that time, so our portfolio fell 18%. Okay. For temporary, I think it was November when the demonetization came, November of 2016.
Yeah,
the
November.
portfolio went down 18%. But in January, so November, December, January, we were hitting new highs. Okay. So these 2 stages, when we are in these 2 stages, your portfolio can go down around 20%, if not expensive. But if you invest in value and growth in expensive markets, your drawdown can be as great as 35 to 40%, which I am not we do not go into that territory. But the stage 3, which we enter into expensive markets, as I told you, in expensive markets, we go into quality. Quality, even if the worst of beer runs come, they do not fall more than 20%. And finally, if you find the 4th stage, the exuberant safety stage, on paper, there is like less than 5% downside because of the cost you have to pay for hedging and things like that. So this is how we view our risk reward thing. That generally we try that we do not have to go below 20% of we do not have to see more than 20% of downside risk. COVID was a phenomenal, part in all the investors' journey throughout. COVID, we fell around 28% because the Nifty only fell 29%. And I think my portfolio was holding superb quality stocks that time. It should not have fallen, but what happened was it was very quick. It happened instantly, within a time period starting from, I think, 17th or 18th of February of 2020. The VIX, it went up directly from 10 to 70. So, yeah, we had lockdown and everything. So, yes, that time we fell 28% in March. But again, if we talk about on 5th March, April, May, 15th of May, we were again hitting new all-time highs. So this is something that we talk about, the guidance we give. But again, that 20% guidance is something which has been respected in the last, I would say, 35 years of history, barring the COVID period. But yes, such events can come from time to time. You have to maintain your sanity and look into the reality of what is happening on the ground when such a situation comes.
Can you talk on market cap allocation? So previous year, as you said previously, you were more weighted on mid and small caps, but today you are on more into large cap. So is there any? Do you see the trend coming back to small and mid cap in India in future?
Of course, I believe that the small and mid caps, they will lead this old economy run the next 2 to 3 years as well. But currently, they've entered a zone where they've become, for me, they've become exuberant. And markets. The one reality in the markets is corrections. So either it is time correction or price correction. I'm not see as a fund manager. I am not here only to deliver returns. The prime reason, the point number one of INVasset philosophy, I'm here to protect your capital as well. I'm here to protect the returns that I've generated over time as well. So we all have been investors, and actually you've seen from time to time that such moments of fear are created in the market. So yes, currently we feel that the mid and small caps have become a little bit expensive. As the correction comes, or as the time correction comes, we will re-enter them and reanalyze the entire portfolio that we like at the mid and small caps, and try to take the best bets out there.
If an individual who have invested in your fund, like since its inception, and what would be approximate, returns that you have generated this time? And okay, what are I'll put this question this way. So, what difference could an investor see? An old investor who's with you since inception, and the investor who just reached out to you. So, in their portfolio, what are the differences that you could see?
So, I think we are at the very stage where INVasset started. INVasset, we were in quality phase when we started on 8th of January 2020, pre-COVID. So that time, my first account was of my very dear friend. So a 50 lakh rupees amount that was invested by him today is at around 2.5 crores post all taxes, fees, expenses, and everything. But one has to remember that we have had a fabulous returns in the market. The Nifty, which grows at around 12 to 14%, has grown at around 20%. Yeah. So please keep that in mind. Now, what is the difference? Once we complete the 4 stages, all the returns that we have accumulated are now in the bag. Now, the next guidance of 1.5 to 2x, or the 18 to 28% guidance, again starts from here. Yeah. So if an investor comes to me today, he or she will have the same guidance which my first investor had the day when he invested. So I don't think there is any time, never think that it's too late to invest. It's always good to invest and accumulate assets, because I firmly believe that as you progress in your job, as you progress in your business, you'll make good money and increase your lifestyle. But as you make assets, where stock market is one of the best places to create one. If you think long term and do not trade and do not do futures and options in the market, a lot of money, a lot of wealth can be generated as assets in the markets. So there's no difference between who came 5 years ago or who came today, I would say.
Yeah. When you say markets are quite expensive, for the investors who are entering now in the market, they are quite, biased to say if they want to invest now, or should they wait for the dip to happen? So what kind of an advice that you want to give to such investors?
See, when the dip comes, there will come fear with it. And when the fear comes, your, I would say, zeal or your mind to invest would take a back seat, and your fear would take the front seat. It's okay to invest in SIPs. It's okay to have some tranches. As a fund manager, if a new investor is coming to us right now, we are doing around 10 weekly SIPs for them. And as the market, suppose a week ends on a lower note, we'll put in 2 SIPs there. A week ends on a higher note, maybe we'll not do one. So we are doing something like that, planning the investment carefully. But in the long run, it does not matter. In the long run, if you on day one believe that if you're investing a crore rupees, and then you're not investing crore but investing something like a 90 lakhs or 85 lakhs, if you win over that 15% problem that every investor goes through, then a lot of money can be made. You're talking about a 18 to 28% CAGR over the year, with an 18% downfall that you have to see once. So I think it's okay But yes, if you are in a fear or if you feel that the markets are overdone, you can go in for SIPs. But yes, I'm very sure I've seen it time and again. Anybody who wanted to come in when the dip would come, the dip with it will bring a lot of fear, a lot of confusion, and I have seen the best of the investors taking a backseat and not investing at that time. So I think let your fund manager take that decision.
So, do you sit on cash during the dips?
You're sitting on 50% cash right now.
Okay. Okay, got it. So moving on, there's a growing sentiment among the investors that India has been overvalued, and and slowly the shift we can see moving to Japan. In fact, even in China because of the manufacturing getting cheaper. So how do you see this perspective towards? Do you really feel India market is overvalued?
See, you have to compare apples and apples. The problem with let's compare India and China. China is developing, India is developing. China, we can say, is moved on the developed side now. India has the advantages India has right now is firstly we are a democracy where everybody has to come in for elections every 4 or 5 years, and you cannot every 5 years you have to come in for election, and you cannot put in an autocratic rule and do something which is against the law. In China, the government is the law. Here, government is not the law. We have a system here. Then comes our demography. We have such a large working population, young population, ready to work for longer hours at a lower median wage. So it provides a lot of sense for companies to invest in India. Then we have brought our tax rates down to 25%, where we have become a competitive tax regime. We have brought in GST and then formalized our indirect tax regime. So what is happening in India is that uh, there is something. I'll give you a better example of this. I went to Indonesia for some business meet a couple of months ago, and after buying a bottle of Coca-Cola from the vendor, he thanked me thrice. And I was wondering that these people are so well mannered. Back in India, we do not see this. But then there was this other colleague with me who said that boss, you are the first person who has come to this place in the last 20 minutes. In India, there is a line of 20 people behind you. So the shopkeeper does not have time to say thank you to you. So the demography that India has, the consumption that India has, the democracy that India has, the way we are adopting technology is why India is a little bit expensive from the rest of the world. And India has always been expensive. So I think one should, rather than focusing on how expensive a country or a company is, it should focus on how fast it is growing. What is the peg of India? The Indian peg is still comparatively much better to the rest of the world, especially China. Japan, I think, is not something that we should compare ourselves to. It's a developed economy. How can it compare itself to India? It's just that their banks are doing something great, so they're just going up. I think India, for me, currently, from the entire world, is the best market to invest. Not because I'm investing in India. We invest in foreign markets as well. We invest in the US in a new economy run. But yes, currently in this old economy run, nothing better than India. What a multifaceted market we have here.
Again, shows the love that you have for the markets. And I'll take one question from the audience. Is that Sudha Prasad? Hi, there are a couple of Quant PMS to invest. How INVasset is different from other Quant funds?
I think I've explained what INVasset is to you. I've not focused on ever analyzing what other quants do, because as I told you, everybody has different experience, and when you check what others are doing, then you enter that comparison mode, and then you tend to dilute, your thought or your bent of mind that you from which you operate. So I've explained the INVasset thing for you. I try to do 18 to 28 because Nifty does 12 to 14. No guarantees for sure. I try to contain in 20% because, as I told you, value growth and all the four stages. And yes, I think one way that we can say we are different from others is the level of customer satisfaction that we try to provide to our clients.
Yeah, that was my second, next question.
I'm
Like,
I'm pre-reading your thoughts.
that's true,
You can
actually.
analyze how good INVasset is at analyzing.
Also the market along with it. But when you talk about customer service and communication is the key for any investor relationships. How does that INVasset maintaining that?
I have a
Or
very crude way, coming from a small town, I have a very crude way of customer satisfaction. Or, when I have to take decisions like this, we go to the very basics. So what I've done at INVasset is that firstly, we believe that when you're going in for a PMS, it's a very personalized product. I have investors who have 60 lakhs of net worth and they've given me those 50 lakhs out of those 60 lakhs. So it becomes very, very important for them. As a fund manager, it may not be that important for you, but for the investor, it is very, very important because the sum of 50 lakhs still in this growing country like India is very important. Now, what we've done is we've created personalized WhatsApp groups for all our investors. So if we have around 380 investors right now, we have 380 groups in which everybody from our research team head to our accounts head to our person who's putting the trades to our personal relationship manager and even me, we are all present there. And any query the client has, because traditionally when I used to invest in PMSs and everything, you had to put in mails and then the answer would come. But now you have a WhatsApp group, you ask a query, and within 24 hours, we resolve that query. And we share a lot. We are not all here to just make money. We are here to educate the investors as well. So we do around 20 communications per month in terms of research reports, in terms of articles. This interview that you're doing with us, when we'll have the recording for this, we'll share it in that group so that the investors, they can gain from wherever they can in terms of knowledge. And of course, any query they have, any problem they have is resolved in time.
which means we want to keep the investor educated. Also, you want to maintain the transparency between the AMC and the
Absolutely.
investor.
That is the main point, right?
Yes.
When we are doing something, there should be a greater good also involved with it. And then, I personally believe that I am, it's for my own good only, that if the investor is, he or she likes my psychology, the way of working, his mind is conditioned like that over time, and he believes that this is all right. So they will remain with us for a longer period of time, and we will have a bond which is for, I believe in lifetime things. Like if an so no investor has who has ever entered INVasset has left INVasset. Only one, unfortunately, being yesterday, where the investor wanted us to invest in mid and small caps, had entered only to invest in mid and small caps, but we did not give in to, so yes, we very believe in very long term relationship, and then that can only be done when you formalize them, when you provide information and education to your investors. So yes, we believe in a lot of investors. I write letters from time to time. We call it the Monday Chronicles. You can go it on our website, and everything from our research reports to, if you check our website, Akshara, all our research reports, all our letters that we write from time to time, all the presentations that we have made, all the articles, all the interviews, everything we provide for the investor education, because trained in such a way over 3 decades, I believe that it is very, very necessary.
Which means the ideal investment horizon for any investor is 3 to 4 years.
At least.
At least.
Yeah.
And when you say it is an algorithm based fund, if an investor has when you said when he wanted to invest on mid and small caps, but you couldn't. So how do you customize for any? Do you customize your product for any of the
No, we
investors
do
that's
not
concerned?
customize, but yes, if you are coming today and person A is coming today and person B is coming after 1 year, so all the hard work that we have done in 1 year, suppose out of 25 companies, I believe that out of Akshara's 25 companies, 5 are not living up to the mark, but maybe are good, not worth changing. But I found 5 new companies that I can give to investor B. That is the only thing we done. I think if we talk about the broad scope, 80 to 90% of the portfolios for all our investors are the same, because itni jaldi change hota nahi hai. Things don't change very frequently in long term investing.
And as we are in a technology driven space, how is your AID being set ahead of the curve in today's market? Because every new development, it's more like, I mean, as you said, every disruption is brings something new, a new way to see the market. So how is that incorporated in your AAID?
Again, a thought behind it. When I was investing for myself, when I was investing for my prop fund, when I was visiting various PMSs, so what I noted was that they are investing in the top 200, 250 companies out there. So if I have to do the top 200, 250 companies out there, why do I need to pay a PMS? I'll pay a mutual fund because the expense ratio is a little lower. And then maybe I can do it myself also. To buy a Reliance or buy a ITC or buy a Hindustan Lever, I don't need anybody's advice. And because of that, the returns are also not that great because everybody is focusing on those 250 companies. Where will the alpha come out of? So what INVasset AAID has helped us is we research over 1,800 plus listed companies out there. And from those 1,800 plus companies, we get the top 100 companies with maximum relative change. Now that maximum relative change helps us to find out the sample set that the other people have for 250 well researched companies. We have a sample set of 100 non well researched companies where relative change is good, and then we try to get the top 25 to 35 companies out of them, which in the near future should do well because something for them is changing. One is this. The secondly, how AID has helped us is like at the current situation. I can totally go wrong that the market does not correct and goes into exuberant modes that we have not seen before. But yes, at 19,500 level, Akshara, as a person, as a human being, as Anirudh Garg, I was seeing markets expensive. Okay, markets are now become expensive. But my AID was telling me that, boss, see, from here, your risk is 7% or 8%, but your reward from here is say 50%. So it based on a multi-factor model, it tells you that these are your risk reward ratios. Please do not give in to your emotions and take your decisions based on based on numbers, based on actual data. Then you approach the markets with more confidence. You'll not be right all the times, but yes, one thing that you need while investing is confidence, and that confidence I think AID has provided us from time to time.
Apart from AID and apart from Anirudh Garg, we haven't seen any of your team. So if you could let us know who all a part of this fund.
So see, everything that the AID stands on today is for one man, Mr. Rajneesh Garg, my father. Believe me, Akshara, 30 years, 28% compounding is a very difficult job, easier said than done. From whatever we have learned is from him, Mr. Rajneesh Garg, a very avid investor. Today he's 60, 62, and I would receive calls from him at 2:30 in the night, that okay, I think this is something that you can incorporate in your algorithm, and this is something that I've witnessed. Please research it for 35 years and give me a report in the next 2 days. So he's the idea generator for the company. We are better implementers. Secondly, I have a wonderful team of equity loving people. uh, their experience ranges all the way from 5 years to 35 years. Those young kids coming in with a lot of code and tech, and the big data that I used to be very afraid of, simplifying it for me, bringing in chat GPT. So all those things, I think the only thing that I focus on when selecting somebody for the INVasset team, we have a group of 12 research people apart from, and then maybe around 10 to 12 operational team. But the only thing that we chose our research team on, either they are from the same backgrounds. For example, our cement person is somebody who's worked in the cement industry for 20 years.
Okay.
Yeah. So he did not want to work full time with us, but he wanted to collaborate us so we have a long-term collaboration with his team. Either we get people who love equity. So those who dream, sleep, eat, breathe equity. So
Just like you.
yeah, yes. So these are the people that you don't have to tell that okay, when you're sitting in your free time, please try to do some research. Their mind is always inclined into the research direction. So yes, these are the two qualities that we look for when we do not look in for very higher educations, like you have to be a top IIM graduate or IIT graduate. Those people are there for coding, but yes, we love people who love equities. So a wonderful team. Thank God, it's always for the team. We are just guiding them and working with them in collaboration.
Thank you, sir. With that, we've come to the last question. I don't
Yeah.
know if you could answer it. Have you invested in your own fund?
100% of my wealth, Shira, is invested through INVasset AAID. 100%. Apart from one house and one office that I own, the entire prop fund of Anirudh and Rajneesh Garg are invested in the INVasset AAID. This is how confident we are for our systems.
Thank you, sir. With that, we've come to the end of the session. There's a lot to take home, and I could see a fund manager who loves equity more than his blood. So, thank you for that, sir. Thank you for
Thank
giving us an
you.
insightful session. It was wonderful.
Thank you. Thank you.